Hi, everyone. So sorry for the delay. Good to see you, Sophiya. Just wait for a couple of others to join. Hi, Karen. And I think, is Nikhil on?
Hi, everyone.
So Nikhil has messaged and he said he was having some issues. Let me just message him on WhatsApp to see if he's going to join or dial in. And then we'll start. I'm so sorry we were having issues with the Zoom just a minute ago. So you'll have to excuse me as well. I'm recovering from COVID. So there might be a little bit of that happens during this, and I'll mute myself as often as I can. Oh, good. Hey, Nikhil.
All right, nice to see you.
Okay, great. Hi, everyone. I think we have our co-hosts and we have all of our panelists. So for those of you who don't know, my name is Kukreja. I am co-chair of the blockchain committee for the FinTech Association of Hong Kong. And my co-host is Varley, who is also a co-chair of the blockchain committee. And we are pleased to have this virtual session that may be a bit of a beginner's sort of topic for some of you, but we thought it would be good sometimes just to go back to basics and talk about business use cases for blockchain. So blockchain applications, as many of you know, go far beyond cryptocurrency and Bitcoin, although that just seems to be, what everyone thinks. And with the ability of the blockchain to create more transparency and fairness, and also save businesses time and money, the technology seems to be impacting a variety of sectors in ways that range from how contracts are enforced and to how governments can work and whether there is efficiency built into the system. So talking about these themes with us tonight, we have Karen Qian, who's an associate director at Digital Asset, Nikhil Sharma, who's the head of growth at Onyx Digital Assets of JP Morgan, and Sophiya Chiang, a founder at Deploy. Hi guys, thanks so much for your time and welcome to our community. So why don't we start with each of you telling us a little bit about yourselves. Karen, let's start with you.
Sure. Hi, everyone. My name is Karen. So I've been with Digital Asset, like an enterprise blockchain firm, for 2 years, and I cover sales. So a lot of that is like hearing the client about their pain point, discussing where they want to go, and oftentimes also involves like challenging them. Oftentimes like why they don't want to make a change. So I think in my role, I have the pleasure to work with clients such as Goldman, HSBC, Hong Kong MA on a lot of their tokenization initiatives. I have to say, thanks a lot for them, like for their support and very innovative ideas. So to make Hong Kong where we are and putting Hong Kong to the tokenization map globally.
I can go next. Hi, Nikhil Sharma. I know a few of you.
Sophiya?
Oh, sorry.
Oh, go ahead.
Go ahead, Nikhil, go ahead.
No, it's fine. Sophiya, go ahead.
Hi, I'm Sophiya.
I can jump in next.
Sure. Hi, I'm Sophiya. I'm one of the co-founders of Deploy. We are a newly founded startup. My background is in computer science and data science. So I was in tech by training, but my co-founders and I have come together and realized a pain point in the VC industry where it's really inaccessible and it's really non-transparent as of right now. And that's also why we founded Deploy, where we created a decentralized scout and expert network to bring deal flow to VCs and early stage startup investors.
Hey, everyone.
Well, Nikhil?
Hey again. Nikhil Sharma, I'm a part of JP Morgan. You've probably heard of Onyx by JP Morgan. That's our blockchain business unit. Within Onyx, we have 3 blockchain networks, streamlining movement of information, money, and digital assets. I head growth for the digital assets blockchain network that we have. We call it Onyx Digital Assets. And the premise here is basically tokenizing traditional assets and building financial products with them. That's what we do on ODA. So we have 3 applications on the platform, which I think we'll get into a bit of detail as we move forward. But yeah, that's me. And good to see some familiar faces here.
Cool. Let's get into the meat of this then. Let's talk about blockchain generally. The industry is booming, and the blockchain market size is expected to reach 67.4 billion by 2026. What do you think is driving this increase in adoption? Nikhil, let's start with you.
So we've been on this journey, Kat, from 2015. So before things started in the financial institutions kind of space, we've been doing this across building networks, building applications, building platforms within JP Morgan. We started commercializing it through a business unit in 2020. And obviously through this journey, what we've seen is different pockets in the market and different players in the market have started warming up to the fact in terms of how they can use blockchain within their existing flows, if you will. So we have seen exchanges experimenting with blockchain. Some of these experiments may be paused or maybe dead by now, but some other experiments have sort of sprung up along the way. Tokenization is a big story. It has picked up in a big way in the past couple of years. That's sort of been the rise and ray for us as well, as far as like Onyx digital assets is concerned. So in bits and parts, in pockets, there's been this realization that some of the use cases which were like proofs of concepts back in the day, they have ended up being piloted. There's been like real movement of value in some of these use cases. I can talk personally from an Onyx digital assets point of view. We've processed about $700 billion of notional volume through our platform to date. We launched in the end of 2020, beginning of 2021. And this is through our, we have an application on the platform called Intraday Repo, where we enable access to real-time liquidity through the mechanics of repo, like repurchase agreements on blockchain. And just this application alone has been able to sort of process that kind of volume since we began. So I think there's this increasing belief that now that you have applications that have sort of proven themselves out in terms of plugging in with existing financial market infrastructure and delivering real value. Now, when you have that, obviously you have players sort of jumping in, testing it out. Some of these might be at an early stage, but some of these are sort of progressing even as we speak. That's what I think is sort of driving it.
Okay, cool. That's a really interesting take. Sophiya, what are you seeing at Deploy?
Yeah, I mean, I think blockchain in of itself for the last couple of years, it's not really a technological revolution, but rather it is a social revolution, if you will, because the mass adoption is very much driven by the network effect that blockchain has on people. And by opening it up to, retail and allowing mass adoption of this technology is really what allows for this exponential growth. And obviously right now we are in a bear market, but it's still really hopeful in the industry to see that the market size is still growing and there's still a lot of push towards finding the utility towards finding new use cases, business use cases for blockchain. So I think it very much was driven last year by this social revolution, but overall, now we're seeing more and more bad players getting weeded out, and now we are seeing more utility in the market.
Okay. And Karen, I mean, we've heard from Nikhil and Sophiya a little bit about the financial use cases, and we'll talk about that a little bit more, but I know you do work with non-financial use cases as well. So what do you think is the drive there?
Yeah, I think a lot of that is also on the data, like able to segment data and also like to maintain the privacy that, sorry, let me just figure out something on my.
Everyone's having tech issues today.
Yeah, like tech is not the easiest problem to
No,
solve.
it's not.
The
irony.
Yeah.
But yeah, so you were saying about data?
So yeah, I think a lot of the use cases or each of the use cases, financial, like capital markets or non-financial use cases will probably data segregation, how we are able to maintain privacy, like, and also performance at the same time that enables like large amount of data to be transacted or sometimes across the board. These, like the fundamental of the distributed ledger are identical, I guess, across the industries. So digital asset, like we're probably the strongest in terms of sector still for financial institutions. Like on the post-trade, a lot of that is to look at how we're able to use a distributed ledger technology to enhance operational efficiencies. So that idea can be applied across the board to non-financial ideas, like non-financial industries. With industries such as supply chain, trade finance, which has certain elements with financial industries, and also to certain projects that are really just identities focused, say such as KYC. How are we able to get KYC identities across the board? And we didn't work on the project during the COVID time. I think a lot of the discussion is how we are able to preserve identities across between China and Hong Kong, or Macau, Hong Kong. So we didn't directly work on the project, but I think it also has the element of blockchain. So certainly, I think this touches on every aspect of everyone's life.
Cool.
Interesting. So I guess, Nikhil, back to you. I guess you've been in JPM. JPM have been an active adopter of blockchain technology for about a decade now. Can you describe some of the use cases developed and how they've improved customer service offerings?
Sure.
Across the board?
So I'll start from sort of a macro context and then sort of go micro into what I look at day to day. So Onyx as a business unit that we set up was basically to reimagine how things work in the financial markets today. It started out within the wholesale payments division that we have within the bank. So we started looking at how we can streamline movement of information, money, and digital assets. And from an information perspective, it's almost like we built a network where correspondent banks could interact with each other on a peer-to-peer basis, and they could move payments related information faster so that payments can sort of leverage off that faster movement of information, move faster through the chain. So if you could imagine, when a payment is sent from a sender to a beneficiary today, and it passes through like a long chain of correspondent banks, and you have, let's say, a sanctions check, an FTAHK check that lands up somewhere along the chain, Bank 4 does not really know the existence of Bank 1 and 2. It just knows the existence of Bank 3 and 5 because that's who it has relationships with. So when you need to kind of have any kind of checks to be done with Bank 1, goes all the way sequentially up the chain and then comes back. Similarly, like the other way around. So what we did when we created this network is you have a network of correspondent banks that can actually interact peer-to-peer through applications that we are creating on the network, where you can resolve a query, confirm the status of a payment, confirm the address of the beneficiary, and then sort of proceed with the payment. Now that was the information part of it. The movement of value, you've probably heard of JPM Coin, and that's our product, sort of putting a bank account on a blockchain so that we enable movement of money faster, like on an inter-branch basis, on an inter-bank basis, and also on a cross-border basis. That was the initial reason for creating the product. But then obviously we realized that when you have digital assets use cases, cash on chain plays a very important role in terms of settlement of digital assets that are on chain. So we are applying JPM Coin in terms of like DVP use cases as well, delivery versus payments. That's what brings me to like what I do on a daily basis. So Onyx Digital Assets is basically our network where we enable delivery versus payments use cases with tokenized assets and also free of payments use cases. So you could post margin without, you could post tokenized assets as margin without really having sort of a payment component to it. You could have settlement of a security against cash by having cash on chain. Now, the benefit that this brings in is like, if you look at how assets move or securities move versus how cash moves today, they're in separate ledgers. So you have this construct of two disparate systems, two disparate ledgers having to reconcile with each other, which is why the settlement time is not T, it's basically T+1 or T+2. So an example that we built out to sort of solve one of these issues that our client sets had is intraday repurchase, which is our clients wanted to access liquidity on an intraday basis, like intraday financing. through mechanics of repo that they do today. The problem with that is you don't really have precision of settlements on intraday repo. Like you don't really, if you want cash to be sitting in your bank account, let's say 12 p.m. tomorrow, can you for sure say that if you're actually going to present your collateral through your custody channels and you're going to borrow from your payments channels, is that going to land in your account at 12 p.m.? There's no surety of that because it goes through disparate systems. There's reconciliations that are involved. So what we did is basically your collateral that's sitting in your tri-party custody accounts, we basically created a mechanism by which you can represent them as tokens on one ledger. That's what we call as the intraday repo application. On the same ledger, you have cash, which is represented in the form of JPM coin. So now you have the security component of it, the cash component of it moving on the same ledger, moving simultaneously, whilst the borrower and the lender having complete transparency in terms of initiation of settlement, initiation of the transaction, execution of the transaction, state of the settlement, and the culmination of settlement. So not only have you created a mechanism by which both these assets can be settled in real time within a day, but you've also created settlement transparency along the process. So if you look at the current market, like the way it works in the repo space, intraday repo is just not possible in the US. So it almost always sort of gets pushed out into overnight repo. And that brings in an implication on the cost of borrowing as well, because you're actually paying more when you're borrowing it. So to avoid that, what parties used to do, or what transactors used to do, is basically do unsecured borrowing and lending on an intraday basis, as long as you trust the counterparty, but at a higher rate. So when you do secured financing instead of that, obviously you're lowering the borrowing costs as well. So this is sort of an example of where we did DVP, delivery versus payments, where you have on one side, you have the security, and the other side, you have the cash. We didn't stop there. So we moved on to our second application, which is tokenizing traditional assets and enabling collateral providers to post this as margin, variation margin, to their counterparties. So just as an example, like demystify that a bit, when you have over-the-counter derivatives exposures today, you need to post margin to your counterparties. And there are certain asset types in which you can post margin. They are basically listed out in like credit support annexes that you have with your counterparties. Generally, it's in the form of cash. What we wanted to explore, or what we wanted to prove, is can you post money market fund units as margin? So if you imagine, if you hold money market fund units today, you're holding it, they're transcribed within a transfer agency ledger. Can you post it as collateral to your counterparty and like recall it back? There doesn't exist a mechanism to do that. So what we did was we connected the transfer agency ledger to the blockchain, tokenized money market fund units, baked in the entire logic of you can post these units to your counterparty, recall it back. Your counterparty can basically rehypothecate your the margin down the chain, like have it recalled back. So it almost is an example of a product that doesn't exist today, which we have enabled by use of blockchain and connecting it to an underlying ledger. That's one aspect of it. The second aspect of it is this is not just delivery versus payments, it's free of payment collateral delivery. And we've made it possible by tokenization of. That's just a couple of use cases that.
So Nikhil, how successful has this been, and kind of how do you further adopt this in the financial system, right? Even from a payment perspective, I think Swift is trying to do blockchain payments, so you can see your correspondent bank payments as they move through the system, transparency with fees, etc. So, yeah,
So across the metrics for success across different products are different, I would say. In the sense on the first one that I described, which I think you alluded to when you spoke of Swift, is the payments information exchange network. So we have 400 banks on the network right now who are transacting on a daily basis. JPM Coin, we have like an inter-branch infrastructure in place, an inter-bank infrastructure in place. You probably heard of Project Partior, in which we are participating along with DBS, MAS, and Temasek in Singapore, where we're enabling interbank payments, cross-currency on a blockchain network. Onyx Digital Assets, I think I briefly spoke about it. We've processed about over $700 billion of notional volume through the repo application that I described. So that's borrowers actually to date from inception have borrowed more than $700 billion US. And on a weekly basis, we see like $5 to $6 billion now in terms of flow that's going through this platform. Obviously, there are troughs and peaks, but then on average, we see this kind of a number that's going through on a weekly basis.
Okay, and then, sorry, maybe Karen, if you could add to this as well. Like, I understand you're kind of doing something a little bit similar from a Canton network perspective. Do you want to talk about that quickly?
Yeah, of course. So first, I'll probably just follow on what Nikhil has shared. I think like tokenized money market fund, and also like tokenized deposit. I think that's probably something that Onyx I hear quite a lot from JP Morgan. That these are the use cases we are also seeing in the market. Like we're probably using different technology enabler called Canton that runs on demos or our smart contract runs on this particular ledger. So I think the interesting part, very similar to JP Morgan, is that we are looking at not just like a single use cases, like say about tokenized bond issuance, tokenized fund, but more thinking about how we are able to connect different applications together. Because once an instrument is issued, like everyone wants to make use of it. Otherwise, it's still just a digital record. And I think other than like equities are probably already digitized for more than 20 years. So the more important thing using smart contract and or leverage blockchain technology is like how we are able to, from a digital assets perspective, I think it's how we are able to use like the native smart contract to capture and embed the life cycle events into it. So after the bond is issued, that the same bond can be used as collateral, or like the fund can be used as for repose purpose. I think exactly on what Nikhil has shared. So Canton is unique in the sense like as long as the applications are written using the same smart contract language, because we do need a same data or common data definition to allow that everyone is recognizing on the same definition and the same instrument. So as long as like we are using the same underlying infrastructure or the ledger that essentially say if Goldman issued a bond, like the same bond can be custodied immediately on any of the custody application that is provided and on the Canton network. So the Canton network, it has received a lot of attention after I think we officially released a press release last month. However, I think that's still early stage. I do hope to let everyone know that I think the testnet is coming out next month. So after that, we are hoping to see different banks and different intermediaries developing application on that. So there is possibility, Nikhil, I hope to say that there is possibility. I think say if fund is issued natively on Onyx. However, there are certain possibility that a wrap token can be deployed on Canton, so allow it to interact with the other applications also in the network. So what I personally see is that right now, probably from 2 years ago until last year, we are still focusing on each of the bank building its own tokenization platform. Like JP Morgan obviously has a good head start with Onyx. I think the other global banks are catching up on this area as well. And the next step is how we are able to interconnect everyone. And we hope Canton is one of the answer or the right answer on this.
Thanks, Karen. Sophiya, do you want to just add a little bit about what Deploy is doing with what you referenced about using blockchain to facilitate in the VC process?
Yeah, absolutely. I mean, thank you so much for sharing, both of you. I think it's really amazing to see what you guys are pushing forward in the field. And I think I want to take a step back and just reference a little bit of something that you guys all mentioned about the accessibility, the transparency that blockchain provides for different use cases. And the thinking behind why we're using blockchain as a tool for this job is because this founding story of Deploy is that all of the co-founders came from different parts of a startup funding lifecycle. So we've all had different experiences, whether it be good or bad, in how a startup gets funded. So I came from the startup perspective. Some of my co-founders, they came from the investment perspective, or some of them came from the scouting perspective, where we introduced deals to VCs, and then eventually we're not cut out of it, but we're not rewarded for our contributions in that lifetime of a deal. So bringing all these unique perspectives, we realized that we wanted to solve this problem in the most efficient way possible. And it just so happens that some of the qualities of blockchain allowed us to do so with a low overhead. And this comes to, you know, the immutable ledger that we keep talking about, being able to use blockchain to be the touch points of a deal, where we can embed, like you said, embed life cycle events. And life cycle events can exist in logistics or in supply chain, but it also allows us to embed all the touch points of a deal flow so that contributors can be rewarded. And that's also something to do with tokenomics and creating that scarcity and being able to model that supply and demand within the shared language that is blockchain. So that's kind of where we came about. Okay, let's start deploy and start with the problem cases and not really using blockchain as the blanket solution for all of these problems. And yeah, that's actually why we wanted to use blockchain to quantify that contribution aspect of a deal flow, because we find a lot of the times VC investments are happening behind closed doors or dependent on how well connected the startup founder might be, not so much through, okay, who might have facilitated that this deal went through. Some experts might have contributed their knowledge, but they might be cash poor, knowledge rich. How do we actually change the status quo of this? And yeah, that's kind of how we use blockchain technology in the VC space.
Well, that's really interesting. And I can see that, you know, with, you know, the dearth of angels, and also, as you said, people who have the skills to come on, you know, that's going to be interesting how that shifts the balance. Let's move now to look at something that's in the news a lot, ESG. Karen, I know that Digital Asset partnered with the BIS and HKMA on Project Genesis, and that this is a green bond that I think is meant to be helping understand or track and trace greenwashing. Can you talk to us a little bit about, you know, how this came about and the ESG impacts that blockchain can benefit?
Yeah, certainly. So I guess Genesis, like the name already says, like it indicates something that will lead to something much bigger. So like, we did both of the Project Genesis 1.0 and also worked together with Goldman and also another ESG provider or infra for both of the Project Genesis 1.0 and 2.0. So, and also HKMA subsequently has taken some of the lessons learned to tokenize full production, like a green bond early this year in February. So I think like there are three related projects here, like, but the common is like, I think everyone is looking at how ESG like can both be recognized in terms of data transparency and also whether we are able to provide certain incentives, like for say even government to issue green bond. So for Project Genesis 1.0, like the ESG part is, I think it's quite unique. Like the idea is that from a ESG data capturing angle, how we're able to use IoT device to natively track the data and onto the blockchain. So that was achieved in the Project Genesis 1.0. So the data is also added into the smart contract, and like the immunity part that Sophiya has touched upon, I think is one of the key for success, or how it Project Genesis 1.0 went all the way to the UN like climate change conferences. So I would say that in terms of production use, like whether like certain devices like IoT capture, whether that has been married together with blockchain, I haven't really seen a production level of like trials yet. I think there must be certain like business consideration and benefit consideration, because like so far investors have never been able to access such level of data transparency. So like they probably also don't know in terms of like the margin or premium, like how to validate, and especially whether that makes economic sense. However, we know technology-wise, it certainly can work. And Project Genesis 2.0, like I just quickly touch upon that. Like it's coming. It probably tackles the ESG problem more from a financial angle, just given that some of the bonds, like green bond, are issued for like 10 years, or the lifetime of that bond, it can be 5-10 years. And every year they are paid a green premium, like a green credit. So how we are able to finance just on the green credit part, whether that green credit part can be divided from the bond part. So because some of the investors want green exposure, some of them just want financial exposure, or like a typical more traditional financial exposure. So like Goldman teams, or this is probably worked together with their FICC team and also sustainability team, have come out also like a solution for that. So that's in the Genesis 2.0. So I think like people are pushing from like all the angles, like on data transparency part, which is probably a more typical angle, and also like on the financial instrument part, to create new instruments that is only able to be captured or from a smart contract perspective.
Thanks, Karen. So we've kind of touched on finance and ESG. Maybe from a non-financial use case perspective, what are some of the examples of blockchain that you've seen within, say, healthcare or supply chain and other intellectual properties?
Oh, sure. So I
Sophiya, and then maybe we'll move on to Karen. Cheers.
So maybe I can add on a little bit more towards the sustainability angle. One really interesting use case I've seen for blockchain would be, using blockchain and IoT to track carbon credits and being able to trade that so that you can offset your carbon emissions, as an institution where maybe you are having a lot of carbon emitting activities, and you can use carbon credits as a way to offset what you've produced. And there are so many smaller projects all across the world that normally might not get the recognition that they need, or they don't get the funding that they need, but they may be engaged in some carbon capturing activities, for example, like planting trees, and they need someone to fund that. And I think that is actually a great way of embodying, what good blockchain can bring to the world. But even on a technical use case, like you mentioned, the aspect of bringing IoT into the game already changes everything, because everything can be automated. The data collection side is oftentimes the hardest part for quantifying information and being able to quantify contributions. And using IoT, you can track how a hardware might change its systems and how that might contribute to the larger system as well. And robotics as well, you can see blockchain used to coordinate between different robots. So there are a lot of interesting things in this space, but I won't drone on, but maybe let Karen also take on a few examples that you've seen that are interesting to you.
And also, Karen, I know from a conversation we had, you said you were doing something with the Jockey Club. Are you able to tell us anything about that? Because that, I'm hoping, is a non-finance use case there.
Yeah, I think like we definitely want to push for blockchain adoption use cases, like in other industries, like a Jockey Club. Like although it's itself, like we will probably call it non-financial, like however the wagering business is probably even more competitive in terms of performance than the stock market. Like Jockey Club, like on a Wednesday and Saturday, like I think probably in terms of profit or will will be in billions of dollars. So, and in terms of like transactions or the modeling side of that, I think a lot of that is also quite similar in the sense to financial instruments, because the if I should call it gambling, the design of that or the options like on top of the like each of the game or the rules that defines the game can certainly be modeled out in smart contract. So so probably like I think the takeaway is just that smart contract itself, like if we look at from a data perspective or the rules perspective back to the essence of the smart contract, like it enables like certain rules to be embedded for each of the roles that are defined for like following the current, not to say legal structure, but like current agreement in between all the parties. So that's itself is probably what distinguish like public blockchain and enterprise blockchain. So like for stories like that or following this logic, we probably don't want to distinguish too much the financial institutions and non-finance. However, I have to say in terms of the adoption, like the transaction volume and in terms of frequency, blockchain is probably still most used for from our experience, like in capital markets.
Okay, so you talked just then about public and private blockchains, and I know one of the differences there is data and the access to data. So this comes on to my next question, which is, you know, where each of you and all three of you from your different experiences and your different sector expertise, where do you see regulatory opportunities and regulatory challenges in terms of blockchain adoption? I mean, one example that comes to mind is that, you know, entries on the blockchain are allegedly immutable. And in the European Union, individuals have the right to be forgotten. So how does this all work? Nikhil, I'm going to start with you.
I think, so I look at it from a different lens, right? So what we are doing here is, like I explained in our use cases, we are basically representing assets that exist in an electronic form already in a tokenized form. So like, it's not that securities, US treasuries, CMOs, agency MBSs do exist in electronic form today. What we are doing is creating some kind of a control structure through which we create tokens out of these and like build use cases from them. So I think if we look at what the treatment of these tokens are across jurisdictions, there isn't, I mean, if I do a broad brush, I don't think there is legislation across jurisdictions in terms of what these tokens are, how they can be treated, how they can be, like, can that be the legitimate final books and records across jurisdictions? So it's different across different jurisdictions, I'd say, and I wouldn't term it as a challenge. I would term it as like many jurisdictions are sort of getting there. Some jurisdictions are ahead of the others. So some kind of synchronization there would sort of catalyze some of the use cases that we've been doing when we look at like cross-jurisdictional perspective. That and like when you talk about like public blockchain versus permission blockchain, I think the lenses with which regulators look at that is completely different. So I think there's still a way to go before institutions such as ourselves can have complete comfort in like providing any solution on a public blockchain as general availability. So we did something called Project Guardian last year. Not sure how many people remember that, but where we, thanks, where we basically did a cross-currency trade, cross-currency spot trade between Singapore dollars, tokenized Singapore dollars, and tokenized Japanese yen on Polygon mainnet. So that's like that's like two legitimate financial institutions bringing in constructs of verifiable credentials as they apply to a public blockchain, doing a trade on a public DeFi protocol. We used Aave at that point, and we did like a cross-currency spot trade. But that was like one trade, because to make that general availability, there's a number of controls, there's a number of like, there's quite a bit of regulatory clarity that we would need across jurisdictions before we can make that like a general availability product. So I'd say like, I'd look at it from those two lenses. So I think like institutions such as ourselves are a bit further away from like using public blockchain for like for a broader use, I would say. But there are use cases like SocGen has done something on the public blockchain. We have to. But then is it like broad enough? Is it wide enough to be provided as a product to clients? I'm not sure yet. On the other side, on the permission blockchain tokenized use cases, I think some clarity, some synchronization would help.
Okay, Sophiya, what have you seen recently?
Yeah, I mean, I think, I love the Chinese saying of where there's challenges, there are opportunities, because these two things are basically two sides of the same coin. And obviously with regulatory policy making, they always follow innovation, they follow the technology. They're always a little bit one step behind. But what I've seen with the whole virtual assets regulatory space is that people are trying to be a little bit more agile in policymaking. So for example, one of the first movers in creating virtual asset regulation would be VARA in Dubai, which I got the opportunity to visit with the FinTech Association of Hong Kong. And what I really loved about the way they are handling policy is that they listen to feedback from the users. They very much have a test bed, and they're looking at this from the lens of a testing first methodology as opposed to a blanket solution. And going back to the GDPR in the EU, I've had my fair share working with the GDPR and understanding that it came from the perspective of protecting the users, right? The right to be forgotten is so that individuals don't have their data stored unnecessarily. And that's also why in designing the technology used to fix these problems or to solve whatever problem we are trying to tackle would be to first look through the lens of the users and to start with the people first. How do you actually use blockchain or technology or AI for that matter in order to answer a question, right? It's like technology is a tool, but it's ultimately about how we use it. And that's also why I think with regulation, it is there to protect the people. And if we look at that through the lens of people, I see it as a huge opportunity for what we're trying to build at Deploy, because we are ultimately trying to reward our scouts. We are trying to reward the experts who are part of the deal. We are trying to allow feedback for the startups for why they got funding or why they didn't, or create more accessibility towards the deal flow. So yeah, I think that, with these challenges, it brings a lot of opportunities for other people to actually create tools that help people.
It's interesting you mentioned VARA, because I saw in the newspaper the other day that VARA and the HKMA are going to collaborate, which would be great, knowing that VARA has this very open-minded attitude, because I mean, I appreciate this is recorded and this is a public forum, but I think everyone on this call understands that the SOC and the HKMA are maybe slightly tighter in their handling of the regulations. I see Padraig trying not to laugh at me here. But I'm hoping some of that innovativeness and ingenuity will carry through with this collaboration. Karen, what have you seen, or what do you see as an opportunity or a challenge from the regulatory space?
Oh, sure. So first, I probably want to touch upon the public and enterprise blockchain. So, Nikhil, I don't know for you, but I guess that's one of our favorite topic when we speak to our clients. So, so some of I think especially the U.S. banks, maybe due to regulation that we have sensed, say such as Goldman, one of the client that is using digital asset technology to build their tokenization platform. Their head of digital asset, McDonald, has come out public to call it in FT or Wall Street Journal, they can only use enterprise blockchain. Public blockchain cannot be an answer for them. And however, on the other hand, Nikhil, you have also touched upon the SocGen Forge. I think SocGen's position is that they only want to use public blockchain, and they want to take a lot of the private data in-house as their registrar system to record in-house. And I would think the reason why from the public side is that they would think or to leverage the liquidity that is already happening and the network that is already existing. So, which means if KYC or AML can be solved, the investors can be theoretically onboarded much easier and leverage the existing network for transaction. So But what we have also seen is like certain clients demand to have a bridge in between the enterprise blockchain and public side. So I think NASDAQ and several of the platforms have talked about that. So yet I haven't really seen like someone taking it for mass production, but HSBC in one of their issuance used enterprise blockchain happening on demo to record all the life cycling events and to have an interoperability bridge with public Ethereum. I don't know whether the trading can be freely allowed on the public side. However, I think that's probably one of the trial that could point out certain way to bridge the public and enterprise and leverage the pros on both sides.
Thank you. Let's move on to the next question then. Where do you guys see gaps between what we, because I'm conscious of time as well, we only have like 12 minutes left. So let's just move on to our last couple of questions here. Where do you see the biggest gaps between innovations and solutions when trying to leverage blockchain against other technologies? I mean, Sophiya, I know you can talk about robotics, so chime in here as well. But like, where like, what are we going to see here in terms of like the gaps, and how is blockchain or other forms of innovation going to address and fix that gaps? Nikhil?
I mean, I feel out of depth when I talk about other technologies, so I'm going to restrict myself to blockchain. So when we talk about blockchain, we can be cliched here when you talk about education, right? But I think I want to like topple it on its head. I think the framing of what we say when we're doing blockchain, I think that will really help when we actually talk to people. So at the end of the day, the way I see it is it's basically a different rail, a different record keeping system. So I think in terms of how we describe it, in terms of how it's sort of plugging into the existing financial infrastructure, that framing, that education, I think is a gap that I see. We've been leading with use cases. We've been leading with what the benefits are. That's one aspect of it. The other aspect of it is enabling the BAU financial industry, as far as financial use cases are concerned, to understand how the equivalents of what we're doing in blockchain are very similar to what exists in the current financial infrastructure already. It's basically an additional record keeping system. It's no more than that. But it keeps records in a different way. It plugs in with your existing systems in a different way. It's not a great substitute for a database, because that's not what it's supposed to do. You can still continue to sort of retain your existing databases whilst carving out a particular portion which can be put in a better way in a shared database. That's what a blockchain does. That's what smart contracts do. So I think that piece of it is a bit of a gap. And I think education plays a big role in sort of reframing all of that. And that education, does it have to happen at a one-on-one, on a one-on-one basis, or like a service provider to a client basis, or on an industry basis? That's like, I'm throwing it out there, but that's basically what I see as a gap right now.
Okay. Sophiya, where do you see gaps in blockchain and innovation?
I can speak more on the innovation economy. And I would say that the biggest gaps are twofold. The first would be too much buying in on hype is a huge gap, and how a lot of people try to use these technologies because of an emotional response to them, right? They feel that it's FOMO. If I don't use AI right now, I'm not gonna get funded. Or, oh, I need to use blockchain because that used to be the hype last year. And then the year before that was robotics. And it's a lot of people following headlines and not the trend lines, right? It's about using the right tools for the job. And that brings me to the second point, is that the huge gap comes from people not understanding the utility aspect of all these emerging technologies. Rather than just trying to blanket solution a technology over the problem, it should start from, you know, the problem statement. What are you trying to solve, and whether or not you are using the right tool for the job. Like Nikhil mentioned, you know, blockchain, if you can use a normal database why do you need to use blockchain, right? There are certain aspects of blockchain that you should leverage. For example, it is immutable, it is public, it is, allows for that transparency. It allows for an ingrained tokenomics to be built on top of it. I think these are the qualities of the blockchain that should be captured, rather than, oh, because I use blockchain, therefore I am innovative. So I think that is the hugest gap, in that people don't really understand the tools that they're using. And so it comes back to the education piece of it as well, like using that shared language and being able to have that common understanding of what these technologies bring to the table.
And Karen, I guess moving over to moving
Go
over
ahead.
to
Sorry,
you.
go ahead, Erin.
Just in terms of those gaps that we were discussing, right? How do Hong Kong firms kind of help close out those gaps, and what can the FinTech Hong Kong members best do to position themselves?
Oh, sure. So I think it's great to follow on what Sophiya has shared. I think that I picked up 2 points from your discussion is on the problem statement, and secondly is like innovation, how we are able to use innovative technology for the right purpose. So I think in terms of how the Hong Kong firms have been closing the gaps, I think a lot of the projects that we have seen, and also from the discussion with the firms based in Hong Kong, I think the Hong Kong firms and also HKMA, in a way, I would feel is quite pragmatic. The projects that we worked on really starts with a problem statement. So I still recall when we received the RFP from BI, Bank for International Settlements, together with HKMA for Project Genesis, the first page already stated out the 3 problem statement that they want to tackle with Project Genesis. So I think having the right problem statement is definitely the key, or having the right question what you want to do, I think would leave everyone, especially the partners and also technology providers, also a lot more comfortable to have to know what you are addressing. And Sophiya, on your point about how we are able to use the right technology for the right solution, I think having some controlled scope will also lead to great success. I think what we have seen is Deutsche Börse. Although I think their project compared to the other exchange project that we have taken on, is smaller in scale, but a lot more controlled. So that the first phase was able to be closed and launched in success in 6 months. So which gives the project team and also the team within Deutsche Börse and their part, very importantly, their participants, their ecosystem partners, a lot of more confidence in the technologies. So because with the say UI, people are able to see what they're getting into. I think a lot of participants probably don't want to dive into the blockchain technology with a lot of the cryptography understanding. It's probably, we can leave the fund to the security and the tech team, but the right problem and the technology is probably definitely the key. So cannot agree more with this.
Thanks for that. We have 5 minutes left. So that's kind of the end of our scripted sort of section. Does anyone in the audience have any questions for our panelists? Joseph, go ahead.
Yes. One thing I found interesting is that no one seemed to mention the term cryptocurrency. And so I was actually wondering, it sounds to me that there seems to be this divergence between the blockchain world and the crypto world. And I'm wondering how you will see this evolve, especially within the context of the regulatory pressure that the US is putting under cryptocurrency firms, and at the same time, the sort of relative openness that the SFC has to tokenization.
Who's the question directed to, Joseph?
I'm actually interested in Project Onyx, because
okay,
what they're doing is sort of tokenization, and I mean it's in the tokenization realm, and so some connection between I mean JPM I don't think the SEC is going to crack down on JPM coin, but who knows?
All right, Nikhil, go for it.
Well, we know, but I'll hold that back. I mean, JPM coin isn't a cryptocurrency. It's basically a bank account on a blockchain. So I just want to like clarify that before go ahead, right? So the divergence in terms of not working on crypto and working on like enterprise blockchain applications has been in our sort of like in what we do right from the beginning. Like there are lines of businesses that have dabbled in client requests and in terms of like providing them some kind of services in terms of servicing what clients might be doing with crypto assets, but that's in the past. None of that sort of overlaps with what we are doing on Onyx. To sort of clearly delineate what tokenization is and like what cryptocurrency is. So tokenization is essentially you're taking existing assets. You're not really creating a new asset. It's what we create as tokens are not securities. What we create as tokens are not, they have a life, they don't have a life that's beholden to the blockchain network that exists out there. So they have a life outside of the blockchain network, which is in custody, wherever they're held in the underlying record keeping ledger, say the transfer agency ledger. What you're creating is a representation of that, which provides you entitlement on ownership of the underlying asset. So it's a very different construct from what a cryptocurrency is. And a cryptocurrency is basically like issued, transacted, settled all on the blockchain. So there are like native tokens.
Is it almost like, I mean, like you speak about it and I just think like security tokens and I think securitization, which is essentially kind of where you're getting at, right?
I mean, which is what I was getting to, which like native tokens that exist in the market today. So you can create like a construct, which is a native token that represents security. But then even that is not a cryptocurrency because the way you're creating it, the way you're sort of issuing it, the mechanism is completely different from what exists in the public crypto markets today. So, I mean, in terms of where the markets are going, where the regulators are going, I'll stay away from sort of commenting on that. But this divergence has always existed. Like the crypto markets were doing what they were doing, like the public crypto markets, and we've continued to sort of build on our use cases on the enterprise side, right from the time the markets were at a high, now they're at a low, there are other things going on, but then like that doesn't really impact what we are doing on a day-to-day basis, because our products that we build here are basically extensions of existing business and product lines that we have within our business. So like transfer agency of a fund, that's something that we're already doing. What we've created is like a new rails on which it can be done. So while that might have like a sentiment impact on what you're from what you're seeing in the markets outside, tangibly in terms of what we do on a day-to-day basis, it does not have an impact.
So in order to just to paraphrase what you're saying, there's
sorry, Joseph, sorry, we are at time. So can I ask if you do your follow-on privately? Do you mind?
No, yeah, sure.
No, that's fine. Sorry, everyone, we are at time, and I hope you appreciated our conversation tonight. Thank you very much to our panelists for your time. One little plug from me, the FinTech Association's AGM is on Tuesday. So please, I would love to see as many of you turn up in person. And a personal plug, I am running for the board. So if you're minded to vote for me, I would greatly appreciate it. I figured the men would do it, so I thought I'd get away with it too. Anyways, thanks a lot, guys. I look forward to seeing many of you in person in the near future. Have a great evening ahead. Bye for now.
Thanks.
Thank you.
Thank you. Bye.